Good morning to everybody. Um, Hopefully we can kind of get this done quickly so that you guys can get on with the rest of your day. We're going to start with IRS updates for tax year 2022. There are quite a few big changes that are going to impact refunds versus the way they were last year. So we're going to cover child tax credit changes, child and dependent care credit changes, couple of minor changes to earned income tax credit, the 1099-K, annual changes, and then other tax law changes that we have seen or will see. So starting with child tax credit. So child tax credit is reverting back to its pre-2021 partially refundable form. So as part of the COVID relief package, the last COVID relief package, they adjusted child tax credit, made it fully refundable, and then increased the amount, changed some eligibility requirements, and they were doing the advanced payments of the child tax credit throughout the year. So what's happening now is that we are reverting back to what it was in 2020 and the years prior. So the credit amount is going to drop back down to 2,000 per child. It was 3,000 for children 6 to 17, and then 3,600 for children 5 years old and younger for 21. The eligibility actually changes as well. It goes back to those that are under 17, so age 16 and under. It was under 18 last year, and then again, there were no monthly advance payments. Now, remember, when we say partially refundable, going back to the way it was, it's 1,400 of that 2,000 is refundable, 600 is a non-refundable credit. So it's just going back to the way it was prior to 2021. Same thing with child and dependent care credit. It's reverting back to its 2021 non-refundable form. So in that COVID relief package, they made child and dependent care the child and dependent care credit was fully refundable. Now it is fully non-refundable. So for tax year 2022, the amount of qualifying child care expenses decreases from 8,000 to 3,000 for one child, and 16,000 back down to 6,000 for two or more children. The maximum credit is a really big shift. The maximum credit last year was 4,000 for one child. This year it's $1,050. The maximum credit for two or more children was 8,000, and it's going down now to 2,100. And bear in mind, it's going down to 2,100 as a non-refundable credit. So we're not going to see the substantial increases that we saw in refunds based off child and dependent care credit. The max credit rate is 50% of the expenses, but that only applies when the AGI is under 15,000. Last year, it was under 125,000. The credit will gradually decline until it reaches 20% when the AGI reaches 43,000. So between 15,000 and 43,000, it'll incrementally drop between 50% down to 20%. And then 20% applies for all AGIs over 43,000. And there is no phase out. Okay. Earned income tax credit. The disqualified investment income has increased to 10,300. Taxpayers with children without SSNs, that's reverting to the pre-2021 form. And then for those individuals wanting to qualify with no children, there were quite a few changes last year that we saw. All of those are being rolled back to what they were prior. So the minimum age has returned to 25. It was 19 last year. The maximum age is 65 last year. That was eliminated. The maximum credit for this year is 560, and then the credit is fully phased out at around 16,480 for your single filer, so single head of household. Married filing joint, it's 22,610. I'm going to skip this table. I like the next table better. Oops. So the max credit and max AGIs for earned income tax credit. This is always one of the slides everyone likes to see. So we got the number of children in that first column, and then the max earned income credit based on the number of children. The max credit for 3 or more is $69.35. If you guys are going to use any of these numbers in marketing, please make sure that you include the words up to. You may qualify for something like that so that you're not giving the impression to taxpayers that they're going to get $6,935 by doing their taxes with you. The IRS has cracked down really, really hard the last couple of years, specifically about misleading marketing. So the max AGI for single and head of household filers um, is listed here as well. So it's 16,480 for those who don't have any children, and then 53,057 for those that have 3 or more. So I generally share this information with you guys so that you know where that cap out line is, regardless of their filing status, and that's $59,000. Look, if they're over $59,000, regardless of how many children they have, regardless of their filing status, they are not going to qualify for EIC. That'll save you some headache as you're trying to figure out why a taxpayer doesn't qualify for EIC. Now we get to the 1099K, which is a hot topic on social media. I think even the news, I saw a couple of articles this morning about it. So, third party payment settlement networks, so companies like PayPal, Venmo, Zelle, Cash App, are going to be sending 1099Ks to taxpayers that are paid over $600 during the year for goods or services, regardless of the number of transactions. This is a sizable shift from the way the law was interpreted before. Previously, the form was only sent if you were over 20,000 in gross payments and participated in more than 200 transactions. This is a concerted effort by the IRS to keep people from avoiding paying taxes on income, if you will. So the change in this reporting threshold means that more people are going to get this 1099K than have before. The 1099K reporting is only for money received for goods and services, and it does not apply to payments from family and friends. Now, the follow-up question I always get on this is, well, how are these companies determining it? And the truth is, I don't have an answer. I don't know specifically how they are determining this. The only thing I can tell you is if they got a 1099K, you've got to report it. It's just like if they got a W-2 or a 1099 miscellaneous or 1099 NEC. If they got it, they need to report it. If they feel like it's incorrect or it's invalid, they would need to address that with the vendor, with PayPal, with Cash App, with Zelle, with Venmo, whoever sent them the 1099K. They would need to address that issue with them if they feel like they should not have gotten one. I say this because if they do not file this form, we're going to see what we generally have seen historically when a 1099 is issued but isn't included in the return. It's going to delay their refund. They're going to hold it until they file that 1099K. They're not going to just be able to avoid it by not filing it. That's not going to work. Okay. Tax brackets, tax bracket adjustments for 2022. Yeah, honestly, there's just some slight shifts. This may just be something that you want to review for later so that you can kind of understand where the tax brackets are and how how the tax brackets could affect them individually. Standard deduction is increased a little. Again, this is pretty standard stuff. There's one thing I want to point out here, and that's this married filing separate. You see, we have that asterisk. Um, I was unaware of this until this year, and it would just happen in a casual conversation with someone that I know that works for the IRS. So, for married filing separately, if one spouse itemizes, the other is forced to itemize as well. This we knew. What I did not know was that if the second spouse doesn't have anything to itemize, that all of their income over $5 is taxable. So something to keep in mind. Again, I don't know that I've seen it, but I always try to share interesting things when I find them. So here are some expired credits and deductions. The recovery rebate credit, we do know that's gone. There's no more stimulus. I've seen a few articles online from less than reputable places. I would say promoting that there's going to be a fourth stimulus and a fifth stimulus. At this point, there's nothing in Congress to indicate that they're going to be releasing any more recovery rebate credits or any more stimulus payments anytime soon. The above the line charitable cash contribution. So this is the $300 charitable cash contribution that can be reported directly on the 1040 for standard deduction taxpayers. So taxpayers that are claiming the standard deduction versus itemized. That is currently expired. It expired at the end of 2021. The 60% limit on deductions for cash donations for Schedule A is expired as well. Now there is no limit. There is no AGI limit on deductions for cash donations on the Schedule A. And then I feel like this happens every year. The mortgage insurance premium deduction is gone as well. Just as a reminder, the 8915F is still in effect. This is that third year. So for those that don't know, in 2020, taxpayers had the option of making withdrawal from their retirement account if it was related to COVID or another federally declared disaster area. If they did it for one of those reasons, the withdrawal was not subject to penalty, and the taxpayer could elect to have the amount withdrawn taxed over 3 years. So they could have a third taxed in 2020, a third taxed in 2021, and then a third taxed in 2022. Most of these happened in 2020, obviously. And so we are now in the third year. So you'll still be completing the 8915F for those customers that did opt to have it spread or have it taxed over 3 years. You'll the form was filled out exactly the same way as it was last year. If you catch a new customer that has one, you just need to complete the 8915F with the information from the 2020 return. So you'll need their 2020 8915E, and the information that you'll put on the 8915F is either on line 9 or line 17, depending on how they filled out that form. And that's old. So we are done there. Give me 1 sec. I'm going to launch the next presentation. I just need to close this out real quick. Here we go. So now we're gonna, before I move on into specifically the software, does anybody have any questions about anything that we covered? You can either type it in the chat or you can actually unmute yourself and ask that question now. Okay, great. If you end up with any questions later, you can always email support at support@simpletex.co, or you can call into support and we can get you the best answers that we can possibly give you, especially on tax law. Some of those things end up in gray areas, but we'll do everything we can to assist. So here's what's new in the SimpleTAX 1040 2023 software. Not a ton of changes this year as far as that goes, but there are some enhancements that we'll go ahead and cover. One is remote invoicing. We made some improvements to the TaxPass app, billing setup, enhanced split return, the Schedule C search tool, the net operating loss binary attachments, print options, and client letters with extended reports. So we're going to kind of run through these pretty quickly. So remote invoicing, if you are connected with PayJunction, which some of you guys may or may not be, you can generate a remote invoice to send to the taxpayer to collect your tax preparation fees. The integration with PayJunction is a requirement to be able to utilize that feature. If you have questions about PayJunction, you can actually visit them. I believe it's payjunction.com. TaxPass. So the mobile app ID has been redesigned and is now TaxPass. This means you can send a TaxPass invite to your taxpayers from within a tax return. Further, taxpayers can send tax-related information back to you. Additionally, taxpayers can use TaxPass to check their return status and then send messages to the preparer. So we've added a couple of changes there. Billing and setup and enhanced return split. So the ability to carry over prior year invoice balances but ignore overpayments has been implemented. I know that was a request that we had from someone. When entering vehicle asset for allocation, the preparer can designate if the asset is for the taxpayer or the spouse. If the asset's been assigned, it will carry to the correct return when the split tax return function is utilized. So if you're looking at married filing joint and then you decide you want to do a married filing separate, you can actually split the return. And we've given you the ability for vehicle asset allocation to assign what vehicle or what person the vehicle belongs to. A couple other enhancements that we've made. Schedule C search tool. A new field on the Schedule C has been added to make searching for the business code easier. I will show you that when we get into the actual return. The net operating loss carry forward deduction statement binary attachment is now auto created from the NOL worksheet when Schedule 1 line A is not 0. So if you want to create and import your own statement instead of using the NOL worksheet, you can do that at the bottom of the Schedule 1. The option to print the date on page 2 of the 1040 has been added to the print option setup. I think, again, these are things that are specifically requested. The following client letters have been added. Amended state e-file letters as well as appointment letters are now available in Spanish. The extended reports, we added a new search and display fields have been added to the extended reports to make it easier for you guys to create custom reports. Additionally, we now also display the forms that the information is being pulled from. So some of these fields are the Schedule C business codes, appointment dates and times, tax pass. Some new forms and worksheets. These are more business oriented or corporate oriented, I would say, in a lot of ways. So Form 7203 is a new form used by S Corp shareholders to figure the potential limitations of their share, the S Corp's deductions, credits, other items that can be deducted on their individual returns. So you may see this form. The 8697 is the new form used to figure the interest due or to be refunded under the look-back method of Section 460B2 on certain long-term contracts that are accounted for under either the percentage of a completion method or the percentage of completion capitalized cost method. Pro forma Form 1040 estimated tax payments. This form was enhanced to display and print the estimated tax payments. In addition, the preparer can select that the amounts need to be transferred to the current estimated tax worksheet. So we are carrying the estimated tax payment forward. Pro forma 1040 income, other income. So the IRS acknowledgement codes are now showed in that pro forma section. The accepted, rejected, duplicate are displayed for the prior 2 years. New verifications have been added to the 1040X to ensure that all the paid preparer self-prepared return information has been entered. We have updated the information in status. This worksheet's been updated to display the federal direct debit payment history. For those of you that have the business package, there were a couple of changes, a couple of new forms that I wanted to point out. The enhancements we made to the extended reports is carrying over to the business as well. So we'll have new search and display fields as well as displaying the forms that the information is being pulled from. The K2 and K3, which are extensions of Schedule K, can now be e-filed. And we can now electronically file the 1041 state returns for Kentucky, Louisiana, and Maryland. So that's pretty straightforward stuff there. Like I said, not a ton of changes in the software because we just had to make a ton of changes on the in the calculations this year because everything that changed in 2021 is rolling back to what it was in 2020 and years prior. So that's where we've gone. So now we are in the software. This is current software. Current software has already been released. The 2023 software has been released. The filing center will begin accepting returns on January 2nd. So you guys can start sending in your pre-ac advances would be my advice. If they're not doing a pre-ac advance, I would hold it until the IRS opens. You never know if there could be a problem in the IRS end system. I know probably 6 or 7 years ago, we saw an issue where some returns did end up getting held up because they were in during hub testing, and hub testing resulted in an error. So our standard advice is, if you don't need to transmit the return, don't transmit the return. Also understand that once you transmit a return, it cannot be returned to you. We cannot pull it out of the queue. Once it's gone, it's gone. Okay. This is the work in progress summary. I'm going to cover a few things quickly in here, and then we're going to get into actually doing a return, which I think is the most important piece. Just a couple of things to point out. There is a training returns option where you can actually create dummy returns that will not show up in your reporting. The federal rejects, you'll see now that we have Fed rejects and Fed refused. There's a difference between the two. Rejections, it says if it is a federal rejection, that is coming from the IRS. Refused returns are coming from the filing center. So those are two different things. And so support, if you call in and say, hey, I'm having a problem with the return, they may ask you, is it a rejection or is it a refusal? That's what the difference is. Okay. You can track your remote signatures using pending or completed remote signatures on this right-hand side. You can actually update the software here. For those of you that are in a network environment, please make sure that everyone has completely closed out of the program before you apply software updates, just to avoid any errors. Text link in plus inbound rather, is a feature that you guys may not have seen or noticed last year. So now, with the upgrade or enhancement to text link or slash text messaging, last year or the year before, I think it was the year before, you can now have two-way conversations with your taxpayers. So if you text them from the software and they text back, it will come in here into the text link plus inbound, and you can see show all, or you can actually double click and reply to those. So you get some additional communication ability out of the software there. Okay. So we're going to go ahead and start a brand new return. So to start a new return, you click add new. We're going to type in the social. If the return exists in the prior year, you'll get a box that pops up right there and asks you, do you want to carry this information forward to the current year? In our case, we don't. I just wanted to do a nice clean return. So we'll get through this client data sheet. If they agree to receive text messages from you, you want to mark that text message box. Going to give them this, make sure that they understand how often you're going to send, that they can text stop or they can text help. Then we hit OK. You're going to choose the cell phone carrier. In my case, it is now T-Mobile. Then we select the filing status, and down here at the bottom in the gray bar gives you a list of the filing status, right? Single, married filing joint, married filing separate, head of household. And you'll see this used to say qualified widower or widow. Now it's been changed or modified slightly to say qualified surviving spouse. So in this return, we're going to do a head of household. Get that address in here. There is a zip code database. So if you type in the zip code, the city and state will fill out for you. We'll get down into the marketplace question. You're only going to mark this question if they purchase health insurance through the marketplace. They got health insurance through their employer. They did not get a 1095A. You would not mark that box. We're going to go ahead and add our dependent. I can type. Okay, so now we've completed the client data sheet. So the next thing we want to do is we want to add income. So we're going to go add a standard W-2 first, and then we will add our Schedule C. So we're going to add a W-2, just click Add Form. W-2 is already highlighted by default. If you need to find certain forms, you can always search, enter the form number here. You can use index and actually search for a description. That will help you as well. Oops. So we've got our W-2 in. I'm going to click refresh and you'll see the program will auto-populate the forms that it knows this taxpayer is going to qualify for. For example, Schedule EIC, the EIC checklist, the 8812, and then the 8867 is going to end up being a required form. So we know this based on this. So you can see the federal refund amount here is $7,886 based on the AGI. Well, we have a little bit more income. So we're going to go add our Schedule C. So our taxpayer got a 1099 NEC and they got a 1099K. So we want to make sure that before we add any of the 1099s that we add the schedule first. So we're going to go add form. We're going to come down here to Schedule C and we're going to launch that Schedule C. This box here is that field that I was talking about that was updated. This will actually allow you to enter keyword and then you'll be able to click the choices. So for example, if I put paint, now if I go down here and hit choices, it's going to give me anything that has the word paint in it. So this allows us to be able to select different. So we want, there you go, electronic stores. That's fine. We'll say that. So now we want to go down and where we're looking for initially, we want to go down into these gross receipts. And I'm looking for this field in particular, where it says for income from forms 1099 MIS, 1099 NEC, 1099C, and 1099K. If we go straight here and we click form links at the bottom, we don't have to then go to add form and find it and then go through that. So what we're going to do is we're going to take our 1099 NEC, we're going to hit OK. We're going to enter the payer's EIN. We're going to enter the amount. Let's do 6,000. I wonder if I hang on. Can I do? Yeah, I didn't think it. So once you enter the non-employee compensation amount in box one, you want to make sure that you link this. So to do that, you click in this box below that this is linked to 1040 Schedule C or F. Come down, we hit choices. Then we're going to select our Schedule C. And in this case, we didn't put a name on it. Let me go back and put a name on it. Now if I go back to let's go back to my 1099 NEC. My choices now, we'll see that there's that Schedule C number one, and we can go OK. And if we go back now and look at our Schedule C, you'll see that that income is now carried. Same thing with the 1099K. Form, 1099K. Then they'll enter that amount and you do link, again, choices, okay. So now if we go back to that Schedule C, you'll see it's 7,500, so 6,000 from our NEC, and then another 1,500 from the 1099K. So now we go down into expenses. All of these fields are manual entry fields. So if I had $500 in advertising, if I had $3,500 in repairs and maintenance, whatever the case is, right? Those are manual entry, except line 9 can be a manual entry. You have a couple of options on car and truck expenses. You can do form links, and then have to, if you see that when you click form links there, it takes you to the car and truck expense worksheet, but it's also telling you to enter the information via the asset manager. I don't do that for mileage. For actual expenses, I will, but for mileage, I don't. And the reason for that is because there's part 4. If I come down here and I mark this, and I enter the dates, and I enter the business miles, and keep in mind that this year there's a split because the mileage rate from January through June was 58.5. The business miles July through December was 62.5. So, and then you answer the questions. So now if we go back up, you'll see that it's calculated the mileage for us. So there's no reason for me to go into the asset manager. If you're going to use the asset manager for the mileage, that's fine. You can. Just remember that you can take mileage, or you can take actual expenses and depreciation. You cannot take both. So if you take mileage, there's no depreciation. But you can take depreciation on other items. And that's what I'm going to show you now. So if we look here at the depreciation, you'll see it says 4562 depreciation from asset manager. So we need to go to the asset manager. So you got a couple of ways that you can get there. You can go to depreciation over here on the left and double click. You can go add form depreciation and get into it that way. I tend to go this way. It takes you to the same place. Then we go schedule C, and we're going to do a new asset. In this case, we're just going to say SimpleTAX software. Right? It's already selected. Date, place, and service 1/1. Yeah, that seems right. So we'll hit OK. We're going to enter the cost basis. And then we're going to go over into this depreciation. So you'll see there's a couple of things here. And in particular, we want to look at this bonus depreciation. You can elect out. You can elect in. So if you elect out, you'll see, you can actually even see it in the background, how it's changing things there. So we're going to hit OK on this just so we can go look. Keep in mind that this date placed in service is not 1/1 of 2022 for most of your assets. It is the date that it first began being used in business. And that is particularly important for assets. Assets can only be depreciated over a certain length of time, right? They are not something that can be depreciated forever. They have a shelf life, if you will, or depreciation life. So you want to make sure that that date is correct. In particular, or especially when you're dealing with assets. And I'll show you what I mean. Like if I change this, I'm not going to do this one. Let's do 1/1 of 2020, for example. I go return to list, and we hit close. See, nothing's coming up, and that's because we have bonus depreciation. And I'm going to show you what I mean. So we go back here. I'm going to change this because it doesn't matter. There are new rules on this stuff from a few years back, but if we go to this bonus depreciation and we opt out of it, you can do this one. You can do, no, I'm not eligible. But if we opt out, for example, and we go over here in depreciation, now you see that depreciation is calculating. There you go. So that's sort of the gist how depreciation works. Between you and I, I'm not a particular fan of sort of the way this depreciation or the depreciation rules, and things are working currently. Not a big fan of that. So we've added all our income. Let's see what we need to do. And to do that, we're just going to hit verify. And verify will tell us what's missing. Okay, so we're missing a bunch of information. So let's start with this first one. The client information, that's an optional update. 8879 is missing the refund type. Okay, so in this case, I have to do check because bank applications haven't been released. So we're just going to do check. We're missing some more stuff on the client data. So do they want to enroll in Protection Plus? We're going to say no. And we're not going to do the remote signature because there's a fee. There's a $5 per signature fee if you are using remote signature. That is still in effect. I need to put EFIN. Oh, I don't have an EFIN. Right here, there's a question about digital assets. So cryptocurrencies, NFTs, things like that. We're going to say no. Down here, we need to. A lot of these things that are here, guys, we can and will be auto-filled for you. So it's it's not much that you're going to have to do in this part. I did a fresh and clean install this morning for you guys. So that's why I'm filling out all this extra stuff. So we're missing some stuff on the Schedule C. I don't know why it's telling me to review the business code. I don't know. I'm just going to pick a different one. Required field missing. Oh, so we do need to make sure that we mark this as what QBI they could qualify for, what the QBI, what the qualified business income indicator is. In this case, we're just going to say Q. $88.79. Yeah. Do I not have this set up? Sorry, guys. Okay, I do. I just wanted to make sure. And again, like I said, all of these things, and you'll see, this is why we set up the software, because there is so much extra work if you're not set up correctly in filling these things out. So if you need help setting up the software, it's not a problem. We can help you with that. Let's verify again. Oh, that verify is not going to go away. I don't think. Yeah. That's because they can't officially sign until the 2023. So EIC checklist is the next thing that we're going to look at. And this is where you're wanting to answer the questions. And is either of the following true? The child is unmarried. If the child's unmarried, answer yes. Don't read any further. There's no reason to. So when you hit verify, one of the cool things that you have the ability to do is you can actually hit enter. It'll take you where you need to go. And when you answer that question or enter the information, then you can hit enter again. It'll take you back to it. So as we go through this 8867 in particular, it's pretty fast. And so our final one here now is fields that we can't do. Oops. Which is the signature date must be within the processing year. So once you finish that, you'll actually be able to queue the return, and you can queue it and know that you have to pay that technology fee once the wallet is set up. You can queue and you can print. Now, I can't print now because the print package hasn't been released. But there are things I can do. So I want to show you a couple of things that are actually inside this software that you have the ability to do. One of them is send text. So you can come up here and you can click send text and you can say, this is a test text message. You can fill this out. Your return was rejected. Please contact us. Right. And you can say, okay. And that's actually going to, when you say yes, that'll actually send the text message directly to your taxpayer. And I'll show you. Oh, so the client must opt in to receive the text message, and we didn't do that. So let me see if I can opt in real quick. I think I can. That way I can show you guys what the reply message looks like. 78589. 78589. And we want to send start D141320. There it goes. So they opted in. Now I can send that text again. So if I'm in there and they reply back, it pops right up in the window. If I'm not in that return, it'll actually show up in that TextLink inbound plus or TextLink plus inbound that we saw at the very beginning on the work in progress summary. So that is one of the things that you can do. You also have the ability to email tax returns, and you can do that by going to print and then email. I encourage you to make sure that oh, sorry, you can just click email, copy this password. If you do this, and this is my advice to everybody, if you're going to email returns, that's great. Save yourself the paper. Let them keep a copy of their return in their email box at all times. But I would copy that password and store it somewhere locally because it doesn't always save if you make a change, something like that. Having it saved somewhere, and in particular, what I do is after I send this, so I hit OK. You can email the attached password, or you can text it to them, or you can do both. And then you hit OK, and it'll actually send that off, right? What I do is I save that password in here by going up here to prepare notes or just hitting F8 on the keyboard. That's not what I wanted to do. What did I do? I don't know why it's copying it twice. Just in case, right? It's saved in here in the notes up here at the top, so we can access those notes really at any time, and you can see what's going on there. Okay, so those are a couple of things I wanted to point out. The last sort of thing I point out is this document archive. Now, this document archive gives you the ability to scan documents if you're using one of the 2D barcode scanners, or import. And so if you import a file, you can do it from here. You just go into import. Let's see, I'm just going to import this form. And now that file is now saved in here and will open in a PDF window. You can save it from this PDF window. You can print it from this PDF window as well. So it gives you the ability to scan and do those kinds of things, as well as if you scan and you need to attach it to the return, you can do that as well. And if we do new, you'll see attaching things like divorce decree, death certificates, ACA explanation. That was a big one this year. Other miscellaneous things you can put in the description. You can actually attach it with the return. Now, bear in mind that if you attach it to the return, it will go with the return. So the IRS will get a copy of it. Okay. You have the ability to delete documents as well as be able to email them, and the email will be encrypted. So even if they, let's say they want a signed copy of their return, some taxpayers do, some don't, you can send them that after they've completed the remote signature.